Hello and welcome to Voice Events Transform USA 2021 conference, broadcasting live from London. I'm Alexia Croft, conference producer, and on behalf of the team, we are so happy to have you here for the next 2 days as we share ideas, strategies, and tangible solutions on how to move ambition to action and deliver meaningful change across your business. The challenge ahead to successfully and comprehensively shift the world's models, mindsets, and systems behind the sustainability agenda will take decades. And the work now will be what we see delivered in 5 to 10 years. So it's imperative we identify the right technologies, innovative strategies, and potential new partners to help raise this bar for all. And our aim this week is to help you and your peers on this quest. Before we dive in, I'd like to say an initial thank you to all of our speakers that will be joining us today and tomorrow, as well as our incredible sponsors for helping support and build this year's event, namely our official carbon offset partner, Sylvia Terra, our associate sponsors, International Paper, Tillamook and Resonance Global, and our silver sponsors, the Metal Company, Schneider Electric, Guidehouse, and the Recycling Partnership. Be sure to check out our partner hub found at the top of the site to find out more about our amazing sponsors, their work, and how to get in touch with them. And we are kicking things off with a real bang at Transform USA today, as we have some really excellent discussions in store for you, including mobilizing suppliers to lead the climate transition, our biodiversity keynote on the win-win of a regenerative business model, and how corporate brands are rising to the challenge of conscious consumerism. During our live panels, we would love for you to get involved, so do make the most of this time and ask questions of our speakers using the Q&A box to the right of this feed. If you have access to networking, start getting in touch with other members of the audience, see how they're liking the event, and use this opportunity to connect with people that you wouldn't have had the chance to on a day-to-day basis. But that's enough for me for the time being, as I am now very excited to be able to hand over to our first incredible panel of Transform USA, our Sustainability Transition Keynote on Reimagining the Business for Future Success, with Christine Diamente of BSR leading the discussion. Over to you, Christine.
Thank you so much, Alexia. And I just want to say good morning, good day, everyone, and welcome to this keynote session on reimagining business for the future. I'm absolutely delighted to be here with all of you as part of Reuters Events USA 2021. And as Alexia said, I'm Christine Diamente, and I'm Managing Director of Business Transformation at Business for Social Responsibility, BSR, a not-for-profit organization working with the globe's leading companies to create a just and sustainable world. And I'm absolutely delighted to be here today with a top panel, Mindy Lubber, who is CEO of Ceres. We've got Andrew Kassoy, who is CEO and co-founder of B-Lab, and we've got Steve Fechheimer, who's CEO of New Belgium Brewing. And today, what we're going to be looking at is the topic of reimagining business for future success. What are those business models that need to be thought for long-term value? What is the role of sustainability transition? How have mindsets shifted, or how do behaviors need to shift for decisive action in our transformed world? And I'd like all of you to be part of this discussion as well. So while we have 3 fantastic panelists, your questions, your interaction are going to make this session, this keynote session, also a success on the sustainability transition. So please do send your questions in the Q&A, and we will involve you. We're going to have some introductory comments. We're going to have interactive Q&A. We'd like to have your questions as part of this set 10 minutes in, and then we're going to have some closing comments. Now, if I take a step back for a minute, 2 weeks ago, I had the honor of having a preparatory discussion with Mindy, with Steve, and with Andrew. And it was the week of April 22nd. And not only was it Earth Week, but it was quite a historical week. And we just sat there for a moment and said, if we think back to a year ago, how much the world has changed. You know, we've seen the devastating impact of COVID on people's lives, ripping apart societies and economies around the world. This has exposed major social issues such as diversity, equity, inclusion, which we saw that very week also culminating in the verdict of the Chauvin trial after Black Lives Matter and George Floyd for over 6 to 8 months. And world leaders finally standing up to setting net zero climate targets, including the United States, and others reasserting their targets, such as Canada and Japan and many others. It was a real historic moment. We've seen so much transformation. And Mindy, as you said, light bulbs have gone off, mindsets have shifted, global political and business leaders are rising to action like we've never seen before. Now, before we jump into our session, I just want to give one thought. At BSR, we firmly believe that after the extraordinary events that erupted last year and that continue to erupt every single day, the call to action couldn't be clearer. We need resilient business strategies to achieve long-term value for all stakeholders, businesses, civil society, public authorities. And for this to happen, there are 4 key things. The first thing is businesses need to anticipate changes to their operating environment. They have to look at them differently. They have to develop and test strategic plans in the context of such changes. They have to allocate resources to create value in different ways that enable multiple potential futures. And they have to partner with society, hand in hand, with new partnership for inclusion at all levels, including a renewed social contract. So through resilient business strategies, where sustainability and that sustainability transition is part outcome and foundation, businesses will be better prepared to capture the strategic advantage and contribution to the realization of thriving societies. But that's one view. So now on to our speakers. Mindy, Andrew, Steve, I'd be grateful for your introductory comments. How are we reimagining businesses for the future? Mindy.
Great, thank you. And I would say this is a moment in time, a pivot point. I am seeing more change, and I'm speaking a bit more from a US perspective, but not entirely by any means, as it relates to the political situation perhaps. But it's an inflection point, it is a turning point. What we have all at one time right now is a government that is looking at equality, that is looking at democracy, that is looking at sustainability in a fundamental way and setting goals for all of their offices, for all of their agencies, and for all of their secretariats. And that alone is a big deal, and I'll come back to it. But companies and investors, consumers and employees are changing. 2 or 3 years ago, we didn't have a lot of companies who were saying, we own climate change as an economic issue, as well as a human issue and a planetary issue. COVID taught us that everything is interrelated and that we've got to capture those relationships. Climate change is a perfect example of that. If climate change goes in the wrong direction, which it still is moving in the wrong direction, and we don't start bending that curve of emissions, it impacts our economy, it impacts my kids' futures and all of yours. And my kids are grown up, and it impacts the planet and whether we sustain ourselves. So if anything, we have come together and realized these are not issues. Environmentalists aren't the ones who should care about climate change, and businesses should only care about short-term profits. There are no short-term, medium-term, or long-term profits if we don't deal with climate change, as an example. And as I said, what we're seeing is companies are starting to change, not all of them. And investors are starting to call on the companies in their portfolios to change how they look at diversity, climate change. And employees want to work for value-driven companies, not just a company whose only mission is short-term earnings. And you're going to lose the best and the brightest if you're a business looking to build your workforce and you're not looking at values-driven issues. And you're going to start losing customers. So the light bulb has gone off. We have seen more and more focus on values-driven companies. We've seen more and more boards of directors getting engaged in what a company does and what kind of sustainability goals they set. That's crucial. We see sustainability being built into strategic planning and all the way through to the supply chain. So whether it's consumers or employees or investors, whether it's just reputation, there is no question that sustainability is now squarely on the agenda of capital market leaders and not just environmentalists.
Thank you, Mindy. Andrew, when we chatted a few weeks ago, you said that long-term action needs to happen now and that there were new rules of the game. Can you give us a few comments then from a B Lab, an introductory comments from a B Lab perspective?
Sure, and thanks for having me here. I mean, some of this may actually be repeating what Mindy just said, because I largely agree with everything she said. I mean, I think 2020 was the year of interdependence, and people actually realizing that. When we started the B Corp movement 15 years ago, we started it with what we called a declaration of interdependence, and a recognition that particularly in business, all the other things that are happening in society are directly impacted by business and the other way around. And so we can't operate in a Milton Friedman environment anymore where business has one responsibility to make money for its shareholders and can ignore everything else, or even actually create externalities in order to create that value for shareholders. And I think that 2020 was a year where people finally have started to kind of realize that in mainstream business. And it's thanks to the work of lots of credible leaders who have been working on those ideas for a long time. And so the B Corp movement, when we started 15 years ago, we started with 82 very small companies that became certified B Corps. Today, there are about 4,000 B Corps, and they're in 70 countries around the world. And we see trends with those companies increasingly becoming large, held by large investors, subsidiaries of public companies, and in fact, public companies themselves. And what that says to me, since these are companies that meet very high standards of social and environmental performance, transparency, and accountability, is that those ideas from those leading businesses are increasingly being accepted in the mainstream economy, and not just accepted, but people recognizing that those kinds of business models are actually what's going to succeed as a business for the long term. Steve will talk in a minute, but New Belgium is an example of one of those companies that's been doing this work for a really long time, and that many other people, I think, are finally waking up and beginning to follow. And then just the last thing I would say is that I think it's not just about business. Business is still largely owned by investors other than family-owned businesses. And so one of the most important things that I think we now have to tackle is not only what the rules are for business, but what the rules are in the capital markets for investors, because their behavior has so much impact on how business behaves.
Thank you, Andrew. And I think that's a great segue to you, Steve. So tell us about New Belgium Brewing.
Well, thanks, Christina. I'll just start by saying thanks for having me today. And I'm really honored to be on a panel with Mindy and Andrew. They're true change makers that we all owe a huge debt of gratitude to for their relentless work on really important societal issues and for not giving up on their passions and what they believe in. So this makes it a really exciting day for me. New Belgium we're a medium-sized business, and we know we can only have a medium-sized impact by ourselves. So, being in events like this, I think is a real opportunity for us to be an example to other companies and to other people that it's not only possible to address climate issues, it's possible to address DEI issues, but you're able to do that in a way that's also the right thing for your business. And, I'm excited Andrew brought up the context around capital markets, because I think that's a broader conversation that we can certainly have today. I will say to your original question, just around, reimagining business, we have an audience today that I would guess is really an audience of believers and knows that this needs to happen. So our conversation is probably less about what change needs to happen, but what we actually need to do to make it happen. And from our perspective, from New Belgium's perspective, just a couple of thoughts on that, right? The first thing I've been talking a lot about is ensuring your organization has goals and targets, and that you state them publicly, you manage what you measure, and you need something to be accountable towards. We obviously love being part of Andrew's organization, and we think that's a great example of an organization you can join and be part of. It's also really important to get your own house in order, and we talk a lot about that at New Belgium. We need to be sure we're doing what we can to be better. But the last thing, and I think this is where a lot of the conversation might go today, is we can't be afraid of policy. A lot of climate, a lot of DEI issues are incredibly difficult to solve as individual companies. And so policy solutions, things that drive collective action, are really going to be what's needed. And if we can commit time and energy as organizations and companies to getting the right policies in place, I think we can really help drive a lot of change and drive a lot of change quickly.
Thank you, Steve. And I think that's a great segue to my first question to all of you. I mean, when we did meet, and you've just emphasized it right now, Steve, but also you, Andrew, and Mindy, we are all interconnected now. And this interconnectedness forces us to drive action like we've never seen before. So what are those examples of action? You're right that we are right now among an audience who believes in sustainability, who believes in that business transition, or who believes in the transformation to resilient business strategies. What are the actions that are needed? Who wants to go first? Mindy, unmute yourself though, please.
Thanks. First of all, I think what you've heard from my thoughtful colleagues, and they are both so incredibly thoughtful, is that sustainability is no longer in some narrow domain. As we saw with COVID, as we've all just concurred over, it is about the future of our families' lives, our planet, as well as the viability of our economy. If we don't have enough water, we don't have enough business. We can't run our businesses. If we keep having billion-dollar storms, 20 different billion-dollar storms, we can't run our industries when things get in the way, forest fires, floods, and so on. So the first thing we do need to do as a world community is realize this is a world community problem. This is not an environmental problem or a problem for one part of the world or the other. We sink or we swim together. And so we do need global goals, as Steve said, global policy goals. That's called the Paris Agreement. It will be strengthened at the next conference of the parties where world leaders live. But last week in the United States, or 2 weeks ago, the Biden administration said, we are going to support the strongest possible goals for reducing our emissions. And we were able to bring 400 of the world's largest companies with us to stand with Climate Envoy Kerry to say this is good for business, not only good for the environment. It is an imperative, it's essential. So I couldn't agree with Steve more. We can't solve all the problems company by company by company, investor by investor. We need to have a level playing field where everybody's playing by the same rules. And no longer should a company be able to say, I'm a sustainability leader in whatever words they want, unless they have consistent policy positions. And no longer does it make sense to talk about long-term goals. Companies need to have short, medium, and long-term goals, and they need to be transparent. And we need to change our capital market systems. This administration, and we're working with them every day, on what the Securities and Exchange Commission could do, and what the Federal Reserve should do, and what the Department of Treasury should do. And each of those agencies are looking at how to integrate climate risk into our overall economy. So what should companies do? They certainly should get their own house in order, create goals, make them transparent, make sure they're short, medium, and long term. Make sure their boards of directors are competent on issues like DEI and climate. Make sure you tie CEOs' compensation to some of those metrics, because what gets measured gets managed, and what people get paid for gets accomplished. There's an enormous amount we could do, but that's a good place to start.
Andrew, we've seen the rise in the United States over the last year, in fact, the last few years, of investors who, while businesses today, I think the spotlight is on them, as you've all said, to turn around and be vocal and transparent about the policy agenda. Investors today have also shed the light to the top, Larry Fink being a case in point with his annual letter, and even the latest letter, which has really brought ESG on the table for boards, for CFOs, for CEOs, as well as the rest of the organization. So what are those rules of the game? And what are the new rules of the game that we're seeing for capital markets, for the finance community and the non-financial community alike?
Yeah, so first, I guess I'd say it's important to remember that while I think Larry Fink's letters over the last few years have been really important in bringing mainstream attention to this, that there are a lot of investors who've been working on these issues for 30 years of trying to drive business towards being more sustainable or responsible. And so it's amazing to see that shift happening with with Larry Fink's letter and a number of other big capital markets leaders finally acknowledging the importance of whether it's climate or racial equity or addressing low wage and gig workers. So I think there's a broad range of areas where investors, I think, have finally started to recognize those things. One of the most important things that I think is really powerful about the capital markets is that most of those investors are investing on behalf of beneficiaries like all of us in our retirement plans or our pension plans, who have incredibly long timelines and whose interests aren't just in the return on an individual company that's in our portfolio, but actually over the long term, the quality of the air we breathe and the water we drink, and the economic vibrance in the communities where we live and work. And so those investors or investment intermediaries have a real interest on behalf of the beneficiaries whose money they're investing, actually to make sure that they're investing in businesses that are acting responsibly and building a better society around us. So there's a set of rules there, and I think that's about kind of like a culture shift in the way that investors and corporate boards think about their job in an interdependent, globalized economy. But it's also a lot to ask, as Steve, Mindy have both said, any one of those individual actors to sort of like be a hero or stick their head above the parapet when the rules of the game are also contrary to that. And so when people are learning that their fiduciary duties as investment intermediaries or as board directors are about shareholder value maximization, we're not going to get the outcomes that we want. And so I think that policy change is a really important part of this. And obviously there are specific policy changes that we can be that business can play a role in helping to drive on things like racial equity or wages or on climate. But there are also things that the business community and investors, I think, can agree on in order to create a level playing field that are about the basic rules of the game. And one of those would just be that we should drive all investors and all companies to be clear that their fiduciary duties are about a broader set of stakeholders than just maximizing value for shareholders. And I think there's a policy change opportunity there that ensures that we have a level playing field and aligned interests between corporate boards and investment and investors.
Steve, you're actually a company that has completely repositioned itself in this new paradigm. And when you and I were chatting, you said to me there was no trade-off between the bottom line and ESG. So can you tell us more about New Belgium Brewing? And can you tell us about how you're doing it? How are you reimagining business for long-term value?
Yeah, and be happy to jump in. I do think, Christine, I've been with New Belgium about 4 years. I'm incredibly lucky stepping into this role in the sense that New Belgium, which is 30 years old or will be 30 years old next month, has always had a lot of these principles at the core of our company. And it's driven a lot of the decision making at New Belgium over a long period of time. When Kim and her husband Jeff started New Belgium 30 years ago, they had 4 core values and beliefs, and environmental sustainability was one of those original 4 back in 1991. And so that's driven a lot of our decision making over time. So I do benefit in my role from having a culture and having a company that's kind of always been rooted in some of these. And we were a very early member of B Corp as well. And so these kinds of things have been important to New Belgium, but it's evolving quickly. And you know, we're trying to keep up with that pace of evolution. We're continuing to try to drive that change. And my point when we met before around this not being a trade-off is when you think of the sustainability opportunities that are out there are really great investments for companies to make that do drive sustainability in the right direction, do reduce greenhouse gas emissions, and also do improve your bottom line. And I think Andrew brought up some really good points. There's more that capital markets can do here. We're working on a major renewable energy installation that we'll probably announce next year or later this year. But one of the things that as we look at those returns, it's kind of 6, 7, 8%. Andrew would say, you know, a lot of capital markets are expecting 8% returns, 10% returns, maybe 15 or 20, depending on the company. We probably won't get there, right? But we also know this insulation is going to drive electricity. It's highly consistent. It's very low risk. We're going to need the electricity, right? And so there's an actual really good return for the business there because the risk of it is quite low. And so there's an opportunity both for government to think about how do we set policy that maybe improves that return and drives more companies to want to pursue actions like this, right? There's a role for capital markets to say, well, how do we fund these outside of sort of the traditional funding mechanisms for companies? Because a 6% very low risk return, there's a lot of investors out there who would want to invest in things like that. And then there's companies like us who need the right governance in place to actually be able to kind of override those first two things, right? And still make the decision and still move it forward. And so that's where I'm saying I don't really think there's that trade-off today, but there are some systemic things that could change that would make it a total no-brainer for any company, sort of regardless of your size, regardless of your priorities. And then when you go and think more about the kind of the DEI world, if we're not a diverse company, right, we're not going to be able to attract workers. You talked about that earlier, Christine, right? Co-workers. I think Mindy talked about that as well, how important it is, right, that you're a diverse and you're a welcoming company if you want to have the best talent. But also for our industry, right, in alcohol beverage, you look at the demographics of people sort of in their 20s and 30s, which is more of our target audience, and that's an incredibly diverse group of consumers, and you want to be able to mirror that. And so moving forward on these initiatives, it's the right thing to do for sure, but it's also just really important to our business. It's really important to our immediate success and certainly our medium-term and long-term success to be able to be part of those communities and reach out to those consumers. You can only do that if you're doing it in an authentic way. So I do see how all of these things are lined up, and I hate the conversation of there's a trade-off between pursuing some type of ESG and shareholder value, right? I think in most cases, these things are aligned. You just actually have to put the right lens on it, and you have to put the right timeline on it. You're managing for a quarter, okay, that's a different thing. None of us really should be managing for a quarter, right? I'm CEO, I want to manage this company for a very, very long time. I care about what we look like in 2030, what we look like in 2040. So if you put that right timeline on it, then you're going to look at all of these investments, all these opportunities, I think, in a very different way.
Now, we've got a few questions here from our audience, so I'm going to just weave these in. So what is the role, or do you think that the role of regulators is changing within the context of sustainability transition? So we've talked a lot about policy and about the policy change, but I've got a few questions here from our audience asking us about how are the role of regulators changing and what does that mean in the context of sustainability transition? Anybody like to pick that up?
Sure. So let me jump in. It is changing. And what is it? If you look at Europe, where they are now mandating the disclosure of some of the sustainability risks we're talking about. In the United States, the SEC is now looking at that. The Securities and Exchange Commission has a call out for comments on ESG, as people call it. And they are hearing from hundreds and hundreds and hundreds of players, companies and investors, and civil society alike. And it's a fairly simple rule. We are asking them to mandate the disclosure of climate risk, water risk, other sustainability risks that are real material financial risks, not absolutely everything that they do. Because when people have information, they act differently. When information is transparent, they act differently. So it is hardly a radical change to expect the SEC to mandate the disclosure of real financial risks. That's under debate. The Federal Reserve is another example. The Federal Reserve, for the first time ever, is talking about climate risk as a systemic risk to our global economy and our US-based economy. If they make some modest changes in how they look at risk and what they expect in the banks, for instance, that they regulate, will have very different behavior on how banks are analyzing risk and acting on sustainability risk. Right now, Treasurer Yellen, the first time ever a United States Treasury Secretary, has talked about climate risk, not only in her nomination hearings, but in her first 2 months. She's hired a senior person looking at climate risk, and that person is charged with how every federal regulator has to examine risk, whether you're a mortgage company like Fannie Mae, whether you're in housing development. How do you look at it? That will be a massive change as we see government-wide acting on climate risk. So in large part, the US is a bit behind Europe. Europe has taken some steps in mandatory disclosure, but I think the United States is close behind. And the bottom line is, there'll be many that say voluntary disclosure is great. Let's just use all the systems, of which we have some terrific systems out there. But then it's voluntary. Then the words look different, only certain people comply. What we need on all of these things is a level playing field. And the other thing that regulators are assuring is that these aren't issues you look at some days and other days you don't. If you're the SEC, you're asking companies to look at trade risk and currency risk and inflation risk, real material financial risks to our economy. We've seen that climate has become one of those, and it ought to be regulated in that way, in addition to policies that put a price on carbon. Right now, carbon pollution costs us billions of dollars, and most places we price it at zero. That is a false capital market signal. Capital markets respond well to clear and honest pricing signals. We've got to get those pricing signals in place.
I think that's very clear, and certainly being in Europe right now and having seen the European Commission also come out with its sustainability directive the same week as we had the Biden summit, you know, I feel finally things are beginning to align where before we had many initiatives. And we've got another question over here from the audience, which is saying, and I think along this line, what is the best way to ensure transparency? Outlining risks with that level playing field, making sure that you are being transparent on it. But Andrea, I wonder if you have any further thoughts to add to this question regarding transparency, and maybe transparency with different stakeholders as well.
Yeah, I mean, a couple thoughts. One is that I think we're the most advanced on climate on this front, thanks to Mindy, and many of her colleagues have been really focused on driving climate disclosure for a long time. We're finally at a point where it's, I think, becoming accepted that it actually matters. And there are going to be some changes from government, not just here, but in other places around the world, like with the European Commission. I would say there are other areas where there's less transparency, and it's less clear how some of those things translate into financial materiality. Mm-hmm. And so I think there's an important role in driving disclosure around other things like racial equity or worker pay that may not always have direct or clear financial materiality, but we know are critical to the economic system that we're all a part of. And so I think there's a role to play there. And then the last thing is that, which is more of an and to transparency, which is that transparency in and of itself doesn't do anything unless something happens with it. And so one of the things I would argue strongly is that if we want to have a more stakeholder version of capitalism, then we also need stakeholder governance. Like companies and their investors actually need to have a clear set of duties to manage for those things, not just report on them, but then actually use that information and do something with it. And the European Commission is clearly focused on that. Some legislation called the Better Business Act has been introduced in the UK just in the last few weeks that would amend the UK Companies Act to require consideration or balancing of these kinds of ESG issues, not just disclosure. And there are some similar conversations here in the US. And then the last thing I would just say is these regulatory issues are super complex and they go across a lot of different parts of government. And the Biden administration, I think, has done a really good job here of saying we're going to coordinate on climate across all of those different regulatory bodies and agencies of the federal government. There's a group of about 50 organizations that have gotten together over the last few months to propose that the administration in the US also create a White House initiative on inclusive economic growth that would try to coordinate a broader set of these stakeholder capitalism and community investment type issues. across the government in order to make sure there's more focus on them and drive better outcomes, both for the environment and for communities and workers.
I have a question for you here, Steve, and it's someone who's just called you by name and said, how are you addressing supplier sustainability programs? How are you dealing with suppliers? How are you perhaps even changing the way that you work with your suppliers, making the link between stakeholder relationships and that proactiveness in the way that we look at our whole ecosystem of business? Can you talk a bit about that?
Yeah, I'm happy to. I think it's a really important question, because as we look at our emissions, right, over 80% of our greenhouse gas emissions are essentially scope 3 emissions, right? So some part of our supply chain is driving that. So as we move towards carbon neutrality, addressing the supply chain is a really important part of that. Some of that goes back to what I talked about earlier, which is supporting policy, right? And that's a really important part of this, because some of those issues within our supply chain are systemic issues, right? They have to do with the energy required to make an aluminum can or a glass bottle, right? They have to do with transportation issues that all of our suppliers are facing in getting product to us, or that we're incurring as we try to bring product right into our breweries. And that's really important. And so we want to be supporting the policy that sort of addresses some of those systemic problems.
Mm-hmm.
We also do some work like Glass Recycling Coalition, other things where we're trying to lead industry solutions in this space. So we want to engage. Again, we're not going to solve these problems entirely on our own, right? And our suppliers are not going to be able to solve them entirely on their own either. So we're trying to come up with these systemic solutions. The other thing is, as we've thought about some carbon offsets that we're part of, right? We're also very choiceful in how we purchase carbon offsets, and we try to use them to drive changes within our supply chain, within our suppliers. And so regenerative farming is a really good example of where we can put money into that as a carbon offset today. We know carbon offsets aren't a long-term solution. We're not advocating for them as a long-term solution, but they do have a role to play here in the short term. And when we can use really powerful offsets and we can use them in a way to invest in technology or opportunity or learning within our supply chain, we think we can help drive that solution. We hope we can improve those supplier greenhouse gas emissions right through that as well, and have more of a medium-term and a long-term impact than just sort of the offset itself.
So I have one provocative question here that I think has been circulating in many boardrooms and many C-suites, and we're seeing more and more examples of people actually and businesses taking it forward. And perhaps it is an example, as Edelman put in their trust barometer at the beginning of the year, where business leaders today were the most trusted to take action. But the question is, what are your thoughts regarding linking executive pay to climate action, or even ESG at large? Mindy, Andrew, Steve, any thoughts there?
Well, boards have to set priorities for the enterprise, right? One priority is going to be selling more of X to make more money. And again, we ought not dismiss that. That's part of the purview. Although I agree, it shouldn't have to be about quarterly earnings. Investors are trying to be clear with companies that they're interested in more than quarterly earnings, as we heard Steve say. But boards decide priorities. I mean, it may be they get presented with a strategic plan and priorities, but when something's a priority, tie compensation to it. Now, generally there aren't 20 metrics, but if addressing climate risk and the opportunities it brings to the company are part of the core work that a board thinks a company needs to be focused on, then yes, they should tie compensation to it. Now, there are very few companies that do that all the way through, from the CEO down to the last person. I think Intel is one of the companies that has done that for quite some time. But there are certainly more and more companies that are tying sustainability metrics to compensation. And again, if it's a priority, make it clear that it's a priority. That's the way much of the corporate world works.
Steve, how does that work with your company? I mean, ESG and sustainability is the business model. So do you necessarily have to, you could say your executive pay is tied to that because that's the very essence of your business model. Well, what are your thoughts?
So I think even just going one step back before that exact question, Christine, is, we're a public benefit corp, and it gives us that distinction alone gives us the clear opportunity to set a wider set of targets, right, for an executive team. And that's a really important position for us to be in. And something that, as New Belgium's thought about investments, as New Belgium's thought about different transitions to its business model over time, that having that flexibility is really important to a board. There's still a lot of legal concerns that fiduciaries have out there, and being that public benefit corp gives you that flexibility, I think, as a fiduciary to really very clearly have a responsibility to bring stakeholders into that conversation. That's really important. And so to the extent more companies can make that transition, that's, I think, a really important step for people to take. And Andrew's probably much better at talking through that and how that helps guide companies than I am. But as a CEO and as a person, as a fiduciary, right, I love that. And I love what that designation gives us from a flexibility standpoint. I do think as you get into compensation, it's important, right? Mindy, I think both Mindy and I have said today, you manage what you measure. And we do need targets in that space. I can talk for me personally. I do have targets, tied to my compensation that are around, implementing our 2030 carbon neutral plans, around some of our DEI initiatives. Those are parts of my plan. I don't have, it's not just, hey, make X, get X, right? There are a series of other things, other stakeholder initiatives, right, that sit within my plan for a year. And I think that's really important. And I think it ensures that you, as a leadership team, that you put focus on those things, and as a CEO, that you put focus on those things. So I'm really supportive if we're going to take a stakeholder mindset, and people are serious about that. And obviously, I believe that we should be taking a broader stakeholder mindset. And yeah, you do have to tie compensation to that. There's lots of different ways to do that, and you can weight things differently. And like, implementation's a different question, right? That we could probably have a whole hour-long conversation on. But from a principle standpoint, yeah, if that's what you want to happen, then you do need to make those adjustments as well.
Ladies and gentlemen, we're coming to the end of our session here. And while our audience is doing a fantastic job of sending questions, I would like to give you the opportunity actually to share your big takeaway. How should we reimagine businesses for the future? We've talked about a level playing field. We talked about policy changes that are needed, capital markets that have to shift. We've talked about the social contract to really look at inequality in an inclusive economy and society. We've talked about stakeholder governance also playing a key role in inclusive growth. Can I start off with you, Andrew? So what are your final thoughts? What do we need to do to reimagine in business? And I don't want to say for future success. I want to say reimagine business for long-term value, because that for me would be success.
Yeah, I mean, I think to me that requires us, and I think this is happening. You see it happening, like, right. What the exciting thing is, all of this is happening right in front of our eyes right now, which is to me is thrilling. But people are rethinking the purpose of business.
Yeah.
And they're doing that by changing their behavior at individual businesses. They're doing that through collective action. That is helping to drive a culture shift, like a shift in the way we all think about our expectations of the role of business in society. And they're doing that by driving policy change that actually creates a new set of rules of the game. And seeing those things happen all at the same time, like that's what creates systems change, is when all of those things are happening together: behavior change, cultural shift, and structural change, or changing the rules of the game. And I think that's the kind of moment that we're in that makes this so exciting. I'm sure, like, for some business leaders, it's overwhelming, but it's also creating a new generation of business leaders, and it's totally inspiring a new generation of young people who are deciding what kinds of companies they're going to go to work for and who they're going to support as consumers and investors. And people in their communities as well. So I think it's a pretty exciting moment for a major shift in the purpose of business.
I agree, it's an exciting moment, and I'm going to be moderating a panel a bit later on the conscious consumer and how they're voting with their wallets, which is going to be very exciting. But Mindy, final comments from you. policy shifts, we're talking about cultural change, we're talking about rethinking the purposes of businesses, the new rules of the game. What are your thoughts?
One thing that we haven't focused on quite enough is ridding ourselves of the pernicious impacts of short-termism. And we've touched on it.
Yeah,
but
we have.
Everything about our economy is decided, as Steve said, based on the next 3 months. When he as a leader is looking at how to build a company that's strong and profitable now, but in 10 years, in 20 years, in 30 years, we have got to build the mindset, and investors are starting to recognize that. As we tell every company that we work with, when you do your quarterly earnings calls, don't just talk about short-term profits, talk about sustainability goals. That's what investors are looking for. So it's taking hold of what's before us. Consumers do care, employees care, investors care, boards care. Now is the time to take advantage of that focus, that ambition, and make sure it's being woven into the systems and the fabric of our economy, of our companies, and our investors. And it's starting to happen, but only each of us can help turbocharge that.
So changing systems against short-termism for long-term value. And Steve, last 30 seconds.
I certainly echo everything that Andrew and Mindy said. I do think that changing of incentives is really important. We can't have 70% of the companies or 70% of the countries, right, really going after, especially climate, right, addressing that issue. We need the whole world. We need all the companies operating under a different set of rules that make this a priority for them. And if we allow a few companies and a few industries to sort of be leakers in this, we're not going to be able to address the problem. And so, as I said up front, being acceptive of policy, helping build policy, help driving this change at a more systemic level is really important for us to all buy into and to all make happen.
So changing incentives finally with Steve. Steve, Mindy, Andrew, it's been a real pleasure. Thank you so much. And thank you to our audience. Your questions have been fantastic, more than we could have possibly answered, but we look forward to engaging with you further. And Alexia, on to you.
Thanks so much, Christine. Yeah, wow. Well, what a way to kick off the event. Such a stellar lineup and on such an important topic. And as I say, yeah, thank you so much to you, Christine, Mindy, Steve, and Andrew. Really inspiring start to today's discussion. And as Christine said, thank you to all of those who submitted your questions and comments. There was a lot to go through and didn't have enough time to get to all of them, but hopefully sometime in the near future, maybe something physical, we'll never know. I hope we continue in this vein throughout the today. So please do make sure that you keep getting your questions in on the live function. But next up, we have a very exciting fireside chat hosted by one of our very own sponsors, Guidehouse, in conversation with Mars. Britt Harter will be giving us a taster of his new exciting initiative that Guidehouse has started, which is to help engage suppliers in climate action and solutions. Enjoy.